Friends, in this video, I'm going to talk to you on the topic when money goes to the wrong place. First, let me define what is the wrong place. A wrong place could be a sector that is overvalued, an entire market that is overvalued, specific companies that are overvalued, companies that don't have adequate corporate governance, sectors which are just seeing near-term favor, economic circumstances benefiting a sector in the near term but not sustainably so, an economy which is facing headwinds. So, it could be because of valuation on the one side and fundamentals on the other side. These two factors, valuations and fundamentals, create wrong places in the market at every point in time. Today there is a wrong place, tomorrow there will be another wrong place, and 6 months later there would be another wrong place. There will always be a wrong place in the market, which is a place we must not go to. Now, if money is going exactly to this wrong place, what happens? The sad truth is, in every market context, a lot of money goes to the wrong place, which is why only a very small percentage of investors make significant monies out of equity investing. If you want to know the answer as to why the majority of the people lose money in stock markets, it's because their money is going to the wrong place. Now, who should we blame for this? It's very easy to blame others. But what I was taught when I became an investor, and it was almost the first thing, is take responsibility for where you put your money. You take ownership for all your decisions. Never surrender that ownership to another person and never look to blame other people. So, if my money went to the wrong place, which did happen from time to time, I was solely responsible. All investors must understand that if you are investing on your own, you are solely responsible. Now, let's come to the other way of investing, which is you take the help of another person to invest your money. It could be a distributor of mutual funds, a registered investment advisor, a portfolio manager, a bank RM, or any other expert you are relying upon. That other person, external resource, cannot be given full responsibility unless he is managing your money. If you are having a stockbroking account and then looking at videos of a person and then going and buying exactly what he says in the stockbroking account, I think the responsibility is yours. If your money is going to the wrong place, you are responsible. On the other hand, if you are given your money to a PMS manager, like me, I am responsible. So, make the distinction. Always understand that you should make your choices very, very correctly and take responsibility for your choices if you are the decision maker. Now, let's come to the RIA way of investing. Most investors, and I have dealt with hundreds of them, don't understand their role in RIA investing. They want to be a part of the decision, which is their right as per regulation. They decide eventually, but they don't want to take ownership for the decision. That's very sad, because you should eventually take ownership in RIA. And how can you do that? By believing the advice and by trusting the advisor and by choosing an advisor whom you can trust and believe. After you make the choice, you can't be in multiple minds. Even there, you need to take ownership for your decision. Now, after all this is done, once you take ownership or decisively give ownership in the case of a PMS, you should ensure that your money goes to the right places. More importantly, you should ensure that it doesn't go to the wrong places. When money goes to the wrong place, what happens? The first outcome could be that you actually lose money. All those who put money in tech stocks, mid-cap tech stocks, just maybe a year ago, have lost money. All those who bought pharma stocks all the way down from the peaks of COVID have lost money. All those who bought businesses which are growing, like Avenue Supermarts at very rich valuations, have lost money. All those who bought high quality blue chip companies like Asian Paints, like Bajaj Finance have lost money. So if your money goes to a place where valuations are simply too rich, you can actually make a loss in the near term. This is what happens when money goes to the wrong place. Why were these high quality companies a wrong place? They were in a wrong place or called a wrong place because of valuation, not because of performance. Business was doing well, but valuations were too rich. When valuations are too rich, if you invest too much money, you end up being poor in the near term. Now, this could strictly have been avoided, but I find that investors fail to avoid it again and again. Because they're chasing past performance, either in a stock or in a fund, and that eventually leads to actual losses in the near term. Some of these losses may be recouped because the companies are exceptionally good and will continue to sustainably perform, and that sustained performance will again recoup valuations. But that's a long time correction. So, near term you lose money, medium term you lose time. Because you could have put your money somewhere else, which could have been the right place to put your money, and you would have made money instead of losing time and money. This is an opportunity which a lot of new investors from 2020 to 2022 have clearly missed out. They have been carried away by performance, and that performance has taken them to put their money in the wrong places. Having said that, the coming years could see more pain for money which is still going to the wrong place, or money which is still stuck in the wrong place, because a capitulation can happen in the wrong places where people simply lose patience and try to get out. Also, some of the institutional entities like mutual funds who have invested too much money in the wrong places are seeing redemptions. For example, not all small cap funds are receiving money. In January, we are starting to see redemption in many underperforming small cap funds. Last year, one of the small cap funds, and I will refrain from naming it, has had redemptions in excess of 5,000 crores. Now, this can spread. So, what would happen is, the guys having redemptions would be forced to sell their stocks. And you all know the small cap universe is not so broad, everybody is owning the same stocks. So, when one set of guys sell, the valuation will come down and the other set of guys won't be able to support the valuation. That would make small cap more a wrong place in 2023 than it was in 2022. I see this begin, the data is telling me this. We'll have to closely watch what happens in the coming months. So, taking your money out of the wrong place in time before the capitulation is an investor's choice and his responsibility. So, take ownership for that decision. Decide whether you should move your money to a safer place and then gradually invest it back after the capitulation, because there could be one. Money in the wrong place destroys investor confidence. So, it's very important for investors to retain their confidence by taking timely actions and moving to safety. That's your choice, your responsibility, and I hope that you take the right decision which is in your long-term interest. Thank you for watching this video.